Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. So as we can see here, the stock itself has really been trading in a bit of a sideways consolidation period. This condition overall did persist into the end of the week during the Friday trading session. So in this video, we will be outlining some important support and resistance levels, price levels, which can be used to define some broader strategy outlooks going forward. So currently, what we're seeing here is a share price action that has posted lows during the July 24 trading session, coming in at roughly 214.71. Overall, this is a very stark difference if we compare this price action to the monstrous price movements upward that we're seeing previously. So during this price rally that was initially occurring, we did see prices post highs of $271 during the July 11 trading session. Of course, this is really when most of the selling pressure really started for the stock market over the last 2 weeks. And a lot of the selling pressure really has been devoted and directed at the technology space. So here, Tesla is a clear participant. And although the stock did manage to sort of, ignore or avoid a lot of this negative selling pressure in the beginning, we have seen that more recently, earnings results have sort of forced prices lower into this, sub 250 area. So, this initial price move here did cause a lot of damage to the chart. Of course, to the top side, this main level really does come in at this 271 mark. But what we have been watching here previously would have been a support zone that developed right around 233. As the company released its earnings report, the market reaction was not favorable, and we did see a price gap here that did develop to the downside. We can see that this price gap roughly equates to a top of 245, and then to the downside we can see a top of roughly 225. So what this really means is that we have a roughly $20 price gap that skipped right over this 233 level. So what this really means is that the market really didn't even have an opportunity to sort of fill buy orders that might have been resting in that area. So this does tell us that there's a lot of volatile activity that's currently going on in the market. Tesla was able to avoid most of this downside selling pressure initially. But as time wore on, it just became more and more difficult to do this when companies like Microsoft and Nvidia and Apple were all seeing tremendous share price losses. Eventually, this was going to wind up flowing through to Tesla as well. So currently to the downside, the level that we're really watching here comes in just below 214. And this is an important price zone, as we can see here, because, if we look at the exponential moving average cluster, we can see that the stock is currently trading inside of this cluster, like directly in the middle is really the case here. And we can see that we're attempting to find some support here above this purple line, which is the 100 period exponential moving average. So this would be a critical break here if we did see prices start to move further to the downside, because it would suggest that we're not going to be able to fill this price gap relatively soon, and it would start to then target this blue line here, which is the rising 200 period exponential moving average. Currently, this is not found until 202.70, so this would mark a fairly substantial decline from here if we were to see prices fall into that area. Currently, when we're looking at some of the damage that this recent price move has done, we have to take a look at here this rising trend line that was being seen in the relative strength index. That's this purple line at the bottom of the chart. As we can see here, there's a white uptrend line that was characterizing positive share price momentum for quite a while. Eventually, this broke, however, to the downside. This really did start to occur after this July 11 trading session, which is when most of the damage started to occur for these tech stocks. And so what this really means at this point is that this prior trend momentum to the top side has now been broken and has reached a point of completion. So really the trend momentum that led to this prior substantial rally, characterized by this white line here, this would essentially be the distance of the rally, the price distance. But as we can see here, the momentum that would have created this rally or driven this rally has now broken. So we can no longer rely on this same momentum to carry prices further. We would either have to sort of ignite some new momentum or start to reverse course here and start to test prices further to the downside. So as I said previously, if we do start to see a break here, if we did see a break of this purple exponential moving average, I would most likely start to target then the 202 level as a potential area of support, because this was a prior area of resistance, which ultimately led to the breakout point previously. I can kind of point to that area here. If we kind of go back on the chart, go back in time a bit, and look at the significance of this level, we can see that it was quite important to the top side. So if we do see a retest of that area, I would start to expect to see some support once again, because this was such a critical level previously. For these reasons, it would be likely to generate some support here. Of course, this is not going to be seen just yet. We're currently trading at just under 220, so we would need to see further price declines of about $18 per share. But given the fact that this rising indicator momentum has broken, I have to start looking at these trend volume activities here, and we can see overall that the negative trading volumes are now outcompassing, and overcoming the bullish trading volumes as well. So there are several bearish factors here. We will need to start watching these price levels into next week. And here's the current market analysis for Tesla Incorporated, stock ticker TSLA.